Welcome to Next Week on the Trading Floor. I'm your host here on Wealthy on Andrew Brill, and we're here to help you keep and grow your money. Next Week on the Trading Floor was developed to explore current trading ideas, market trends, and opportunities to watch. It's real-time insight to help you make informed decisions in the ever-evolving financial markets. And in conjunction with Market Rebellion, we'll give you picks that will help you in the week ahead. Now, I'd like to welcome in Marc LoPresti of Market Rebellion. Marc, nice to have you back with us this week.
Always a pleasure, Andrew. Good to be back.
So let's start here and talk to me about what's going on in the markets presently as you see it.
Well, it was certainly an interesting week. We got that PCE print this morning. Most important piece of economic data for the week, of course, the Fed's preferred inflation gauge, that number coming in exactly as the street was expecting. Of course, it's still going up, right? Spot 20 was actually the print, but that's what the street was looking for. Directionally, still not what we want, but we're still living in that bizarro bad news, good news world where as long as the news isn't worse than we were expecting, the market seems to react fairly well. We are seeing a little bit of a sell-off today, the S&P looking like it's going to actually be in the red for the first time here in a 6-week block. Definitely some profit taking and some of the bigger names like Nvidia. One of the things that just really shocked me this week, Andrew, was the strength of consumer in the discretionary space in certain niche areas. We saw footwear brands in particular like Birkenstock, Foot Locker, and others. We had on holdings the week before. People are really splurging on their kicks. We saw great numbers out of Best Buy this week as well. So still a lot of strength in the consumer. I don't know exactly where they're getting the money from. I know that with employment being where it is and wages having finally caught up with inflation some time back, that people are feeling a little bit wealthier. But of course, we're also looking at credit card balances and charge-offs and things of that nature and reserves for delinquencies. It's a really interesting mixed picture. And I think that's part of why you're getting a lot of this mixed signals or blurred lines, as I like to jokingly refer to it, when we hear some commentary out of, for example, Permahawk, Neil Kashkari this week, who definitely gave some indication that the numbers are not what this Fed is looking for to get anywhere near their 2% target. So a mixed bag for sure. And I think we're going to continue to see some choppiness into next week.
Yeah, and I have to take a little personal responsibility for the shoe area. I think both my son and daughter bought Birkenstocks this week. So in terms of, those stocks, they've contributed to that. So, yeah. So I know where a little bit of the money is coming from. It's not their pocket, it's mine. But so the like you said, good news, bad news, but it's increasing, but at a lower rate, which right. The Fed obviously wants to see that slow down. So, that's the economy. The Dow took a little bit of a hit 14,000 at one point, down about 200 points from that. The NASDAQ, it seems the NASDAQ goes as Nvidia goes. Yes. So that's, like you said, that, profit taking. Why wouldn't you take profit? We'll talk about Nvidia in a second. When it skyrockets and has the earnings and forward-looking guidance that it had, why wouldn't you take a little bit off the table and go buy your shoes at Birkenstocks? Why not? So, but let's get into our previous picks, which Justin from Market Rebellion did for us. And he picked in, he was very, very bullish on Nvidia. Yeah. And Mark, why not?
Yeah, listen, we're talking, of course, about Justin Nugent, who's a rock star, a member of our team. When he was on last week, I was traveling, Pete was traveling, John was traveling. That does often happen. And Justin, I think his top bull pick, when you asked him what was going to go up towards the sky in the week that now preceded us, Nvidia, I think when he came on, the stock was around 950. Obviously 1157, the handle on that. So that was another great call. He also, I think his bear pick, if I remember correctly, Andrew, was LCID, Lucid Motors. That also went down, recovered a little bit, but that was also a good trade if you followed from his recommendation. So, always look, that power of unusual activity, and we had unusual. We had some pretty significant this past week. Pretty significant bearish put selling activity in Dell. Of course, that stock getting absolutely crushed today. We had unusual bearish activity that we reported to our members in CRM. That's, of course, Salesforce. That company also getting beat up, not necessarily on the print, but on the guidance. And this is one of the things that we're spending a lot of time with our subscribers and our students in our educational courses around, that, it's getting harder and harder to play the earnings because companies might meet or even mildly beat the street's expectations, but you're seeing a lot of the trading, a lot of the real momentum in these stocks, either to the upside or the downside, premised on the basis of guidance. And that's a little bit harder to predict, in fact, oftentimes, than the earnings print itself. And this week was no exception to that rule.
Right. It seems that's where we're headed these days. I mean, Nvidia did well monetarily, but that's in the past. But going forward, it's like, oh, we're gangbusters. Our new chip is out there, and it's going to do really well. And poof, Justin hit it spot on, 200 points, and Nvidia pops up to 1150. So
yeah. And look, Andrew, we just hosted our cocktail hour a little while ago today. We do that every Friday at 1:00 Eastern. Encourage our Wealthy On audience to come and join us for that. You can find out more about that at marketrebellion.com. And we talked a little bit about Nvidia, and our technical analysts, our chartists. I'm not a chartist, unfortunately, although I'm certainly jealous of those skill sets. Demonstrated for our viewers why the technical setup in analyzing the charts was indicating that a sell-off in Nvidia was imminent, and of course that did happen on some profit taking. But I still remain pretty bullish on this name, and I'm going to tell you why. I know it's expensive, and I know people push back on that, but if you listen to where the major growth component, notwithstanding the order that Nvidia got from our friend Elon Musk, it's GPUs. It's a specific kind of chip for graphic processing. And why is that important? Where we are in the AI life cycle right now, if you use ChatGPT or Bard or any of the competitors, you're doing large language model search on text, right? You ask it a question, it comes back, and it gives you an editorial, a text answer. We've only seen the beginning of the application of AI in video. Having AI analyze video files and give you responses either in text or, even more sophisticated, a video file back. Processing of video and graphics in the AI context is going to require even more sophisticated chips, those GPUs that are $40,000 and up. They're not the ones that you put in your kid's gaming console, certainly not in my kid's gaming console at those numbers. And that's early innings. So people ask me, can this AI thing really continue? And the answer is, it can. If you understand where we are in the development of this technology and how it will continue to catalyze the infrastructure and the supply chain of the space, you understand why we remain pretty bullish on some of these names. Notwithstanding, they are expensive. I get that.
So, Mark, let's move on to our unusual activity that we spoke about last time with Justin. And that was, he was a little bullish on Target with the calls, and it did not exactly work out that way.
Look, we don't get them right 100% of the time, right? Nobody does. This is the stock market, of course, and the options market. We had some conflicting signals in the UOA. We had indications both to the bull side and to the bear side on this name. Justin called the bullish activity. We had some rather significant call buying that he reported on, and we got that wrong. The stock sold off. It has since recovered, but we don't get it right 100% of the time.
Hey, look, nobody does, so that's why they call it the game of life, right? But I'm sure if we went back and looked, we're right more than we're wrong, but not all the time.
So we are pretty proud of our win ratios. That is for sure. That is for sure.
Let's look ahead now at next week, and we were talking about Nvidia. And in order to make AI work, Mark, we need the infrastructure. We need the power. And one of your stocks addresses that issue.
Yeah, listen, I mean, there is no doubt that the continued explosion of data centers and demand driven not only by AI, but as we continue to have data used and permeate just about every part of our lives. Our cars are connected, our refrigerators are connected, our watches have become smart, our TVs are smart TVs and connected. All of that generates data that needs to be stored, that needs to be processed, that needs to be, in many cases, analyzed so insights can be derived. AI is only a more fuel on that fire. And it's important that when we think about investing in the growth of AI and the growth of data, you don't have to play the big chip names like Nvidia. Look a little bit further down that supply chain at the data centers, at companies that operate those data centers, and companies that provide energy and power for those data centers. Vistra, as you point out, VST is the symbol. It's got about a $36 billion market cap, and these guys continue to do well on that insatiable demand for energy by that growth of artificial intelligence. We've got an aging grid. We don't have enough to keep up. Vistra is an IPP, an independent power producer. It's one of the largest competitive power generators in the U.S. They've got roughly 41 gigawatts of capacity. They've got both from gas and nuclear, which is actually the second largest producer in the country, independent producer in the country of nuclear energy. By the way, that also teases out, and I'll mention it here, our fantastic future segment that we did on the Rebel's Edge yesterday, where we talked about uranium. There's been this proliferation of the development of new nuclear reactors. Not sure if you've heard about this, but the microreactor space, these smaller reactors that are able to harness the power of nuclear on a scale and a format that was previously not possible. There are 62 new developments as of the end of the first quarter of this year of new power plants, nuclear power plants. Those are all going to need uranium. So that's something that we are also keeping a cautious eye on. But there's a lot. The moral of the story is plenty of money to be made in the continued growth of AI. You don't just have to chase Nvidia, even particularly at these prices, even though I still like it and I'm an Nvidia bull, even though it's expensive.
So that if you have a little bit extra cash, Vistra Corp VST would be your pick, according to Mark. So that they supply the power so that Nvidia could get your work done. So basically, that's where we're going with that. Now, our loser of the week, and this is actually I have one of these sitting on my desk because it's what my company gave me, and it's Dell Computer, who actually came in with pretty decent earnings. But it's the forward-looking guidance again.
Yeah, listen, I mean, it's exactly that story that we were just talking about a few minutes ago, Andrew. You could get the earnings right in line with what the street's looking for, or maybe even do a little better than what the street was looking for. But if you don't give the street what it wants in terms of your forward-looking guidance, you're going to see a sell-off. And, man, that is what we saw today with Dell. Look, they beat Q1. Increased revenue 6% year over year, almost $23 billion on the top line. That beat the street's consensus estimate of 21.5. They also beat on the EPS at $1.27, just a penny higher than the street was looking for at $1.26. And look, the vice chairman and COO, Jeff Clark, who gave the report during the earnings call, said, hey, no one is better positioned to take advantage of the AI boom than Dell. Maybe, maybe not. A lot of traders saying, maybe not. Shares were down at one point, I think, as much as 14% today. Doesn't help, by the way, that one of their primary competitors, HP, closed up almost 18% the day before on their own AI-powered PCs. And we did, in fact, have, before this earnings call, we had some pretty bearish put-buying activity that we reported to our unusual options activity subscribers. We had investors coming in buying the July 110s when the stock was around 132. So very interesting to see how this one plays out. Again, demonstrating the power of that unusual options activity. And I think this one's going to continue to see some pressure, if you want my humble opinion.
So Dell is the pick. They're in the penalty box this week, and we'll head over to our unusual options activity. And for that, we're going to go into the betting world and head over to DraftKings.
Yeah, listen, very interesting news on DraftKings this past week, and when the old online betting space entirely. I think it was Illinois had proposed a rule, and the rule hasn't been passed yet, but they're proposing a rule that would represent an increase of 140% on the existing tax. Of course, it's not a 140% tax; it's a 140% increase in the existing tax on online betting. And markets believing that could, and traders are believing that could take a bite out of their market share and demand for online betting. I personally don't know if that's really the case. Again, this is a proposed rule, so this kind of might have been a sell the rumor. We're going to see how that actually pans out, and if and when that rule gets imposed. Andrew, we did have unusual options activity, some put buying in this instance, the June 35s. Some of this was a roll of a previous position that had been put on even a couple of days before this news came out. So, as is often the case with the unusual options activity, somebody knew something and saw this one coming, and we shared at least that suspicion with our subscribers.
So let's recap it, Mark. Your winner of the week is Vistra Corp, VST, and that's they supply the energy so that the AI can work. Dell Computer is in the penalty box this week, and that might take a little hit. And DraftKings with the unusual options activity. So those are your 3 picks for the week.
Always good to be with you. Appreciate it. And let me know when you'd like to have us. Well, we'll be back on with you next Friday.
Exactly. And thank you for watching next week on the trading floor. We hope you enjoyed the insights and forward-looking information from Mark and Market Rebellion. If you need help being financially resilient, please head over to Wealthion.com. Sign up for a free no-obligation portfolio review with one of our registered investment advisors. If you want to find out more about options trading, head on over to MarketRebellion.com. And remember to follow us, Mark and Market Rebellion, on social media for the latest news and information to help you invest wisely. And if you could like and subscribe to the channel, we'd greatly appreciate it. Don't forget to hit the notification bell so you can find out when we post new videos to the channel, just like this one. And thanks again for watching. We'll see you next week on the trading floor.